Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi, welcome to StockInvest.us podcast for week 44. It's Jim, and this time it will be an unusual short podcast. I'm still out traveling and busy and not even with the right equipment. But we will manage to do the following. We will look at the market in the week ahead of us. We will have a quick look at the week that we just left. We will drop into the portfolio, of course. We will look at the major stocks that we follow, Tesla, Apple, Microsoft, and I can just tell you that last week I was very wrong on most things, except crypto, which were somewhat correct, I would say. As you know, Bitcoin was all about 65,000, ending Friday at 62,000, currently trading around 62,000, but where will it go? I will tell you shortly what I think. So what about last week? Last week I told you I didn't believe it would be a very exciting week. Some up and down, but in general flat. If we look at the results, we can tell that Nasdaq managed to gain 193 points, up 1.3%, ending just above 15,000 points, which is a good thing, I would say, because again, we're above 15,000. Dow Jones did just over 1%, 1.08 if to be correct, ending at 35,677 points. So no major movements. The week was more or less as expected. The question is, what will this week be like? And as I told you over and over again, I see several signs in the charts that we are heading to a major fall. It's just a question of when. Now we are above 15,000 again, and never know markets. This can just push the market straight up to 16,000. There is still this chance that everything can go to 18,000 or even 20,000 because you really don't know. They're still pushing money into the markets. There is still some sort of optimism, but at the same time we see a lot of other indicators turning down. Volume, for instance, in general is going down. Things that indicate that the major players, they are starting to hedge themselves and embrace themselves for something which is coming. And over tons of podcasts now, since I guess it must have been since Christmas, I told you inflation is coming and it will just grow. And Yellen some months ago said, oh, it will just pass. Even Biden said it will just pass. But as I told you, this will get much worse. And now even Yellen is saying the same thing. This is here to stay, and it will stay for sure until the last part of 2022. Even Biden admitted that. But the problem, and of course, Jack Dorsey on Twitter said, oh, hyperinflation is coming. And the thing is that it's really heading towards hyperinflation. And the one thing that you have to know is that when there is inflation, the toolbox that the governments have consists of different tools, of course, but one of them is increasing the interest rates. There is lack of goods, there is lack of many things. If you listen to this podcast regularly, you heard me speak about lack of chips, computer chips, to the car industry, laptop industry, and now there is shortage of things like sugar. There are so many shortages due to logistic disruption, which is of course due to the pandemic, the late consequences after all these shutdowns, if you've really been very long with me, you remember I told you about this container shortage that stacked up in China. China held back some containers, and that caused a very huge ripple effect where there were not enough containers around the world to transport the goods, and things have just slowly, bit by bit, got out of control, and now we are facing the huge consequences. And it doesn't help when they just want to give you more money, especially in the United States, just push more money into the market, because this will just drive things even more crazy. And oil, as I told you, I believe oil would head for 100. Now it's really getting towards 100 because right now it's traded at 85. So I'm just $15 off that crazy target, which I said already back in, it must soon be a year ago. or even more. I think after oil was down at $20 for a short amount of time, it was even given away. They paid to give oil away. That was a very, very short window, a long time ago. Seems like a long time ago now. But then oil got back to the 20s. We were there for a long time, and I told you this will just go up because they were shutting down production everywhere, and there is this logistic disruption, everything. Oil will just push upwards, and it really is. And it didn't help that the Beetle cancelled all energy production in the United States with the Keystone, etc. These things, they are all coming together now, and it's creating this bad environment called inflation. And you should notice yourself if you're sitting in, I know we have listeners all across the world, if you're sitting in Singapore, United States, Norway, Lithuania, Portugal, Poland, or wherever you're sitting, you should start to see all the signs that your energy prices go up, your food prices is really going up, and they will really increase for the next 2 months quite heavily. This, of course, give you less money to spend. And when you have less money to spend, where will you start saving? Well, you will cut down your risk things. And one of the things that you will see is people not investing more into the stock market, and you need that more investment to push things upwards. Of course, there is a difference between single stocks and the market as such, but there will not be enough liquidity into the market. So what can save a situation like this? What can bring us back to that glorious stock markets? Well, of course, as we know, the cases of COVID is rising rapidly again, even though most countries now are fully vaccinated. We see this in UK, we see it in Norway, we see it everywhere, we see it in the United States. They are ramping up in a rapidly speed. And several countries, like Latvia, decided to shut the country down again, and several more countries are speaking about the same. Of course, these things can bring more people back to the computer. It can be more rescue packs, etc. And we can still see some money flowing into the market. Is it likely? I don't know yet. We will just have to see. What I'm trying to say in general is that it's a little bit scary. I also told you last week that gold will go up, and last week gold went up 1.67%. Now it's traded at 1,800, and it will go to 2,000 by Christmas and 2,500 sometime next year. That was my 12-month target. And the inflation, you check that by looking at the 10-year Treasury yield, and it's slowly increasing. It went up 4.82% last week to 1.66%, and you will see money flow into secure interest items, bonds and obligations. So where is markets heading? Well, there is lots and lots of news coming out this week. We are in the Q result season, and these things can actually push the market up. Because if we see very good results for some of these major stocks, they will tech stocks, for instance, they will just bring the entire market up. But we should see very high volatility. And you have to guess where will market be, and then we can look at the fundamental things. What do we expect from the markets ahead of us? Or we can do in combination, just look at the chart. And if we go to StockInvest.us, we type in the ticker Exig, we can see the Nasdaq composite chart, and that will give us an idea. We also know that looking at these major tickers later, we will know. And last week I told you I see these signs of a head and shoulder formation coming, where that previous top at 15,370 will mark the head, and the shoulders would be around 15,000 on each side. Well, what we need now, what we really need, is Nasdaq to go above 15,300 to avoid this signal. Because right now, everything is indicating that that is happening. If you look at the chart, we can see that the volume on Nasdaq was very, very high at the end of last week. Nasdaq is being overbought. It's 78 on the relative strength index last time. Last time it was this high was when it was peaking at 15,374 points. That was early September before falling down. It is in the upper part of the trend, so every single thing indicate that it should fall. The good thing, however, is that over the last few weeks, the market went up from 14,600, 14,400, back up to 15,000. Around 200 was the high during last week. This gives some support below. There are some support at 15,000, later at 14,800, 14,600. Excuse me. So that gives the hope that things can go a little bit slow downwards. There is even buy signals from the relation between the short and the long-term moving average. So there are some good signs. Our algorithms, which is purely data-driven, they say hold. And I agree to this evaluation. It is minus 0.99, so almost a slight sell signal on Nasdaq Composite. I totally agree to this. And looking at the chart for the week ahead of us, I will be very surprised if we don't see a fall this week, which will bring us, it's a little bit hard to say, but given the fact that the volume went as high on the end of the last week, and even in divergence where the stock market fell on the Friday and the volume went up. Given these things, I think it's a fair chance that we can see a fall all the way to 14,600 during the week. Should bounce up, end somewhere around 14,800. It's also very good support at 14,800, so it can bounce up from 14,800 and even break higher than it is 15,200. You really don't know for sure. But high relative strength index is usually a very good indicator for the forthcoming fall. Everything in the chart indicates somewhat the same. Most exciting thing, will it turn around 14,800, 14,600 and then bounce up from the middle of the trend, bounce back up, because that can give a new very nice scenario. If it falls below 14,600, you can really start to worry, because that head and shoulder formation is really coming together, and that will indicate a much huger fall. And combine this with inflation, fear, and more possibly negative news coming out forward. There is this October mix, and well, we all know 1929, and we know October can be a very bad month. Will it be this very bad month? Or will we manage to go into November, which is just around the corner, in a nice way? I don't know. I'll just have to guess. My guess, we are heading for a very bad week, will be my guess, especially the end of the week. Bringing Nasdaq down to 14,600, could bounce up to 14,800 by the week. But I don't manage to see this be a green week, and hopefully I'm wrong, that we will be green. But technically, I would say a red week could be saved by very good earning results. On the other hand, I expect also to see some red earning results due to lack of goods, etc., and increased cost. In general, as you know, there is another word that you can look up. It's called Stagflation. There are things indicating that we can again head into stagflation period, which will be an indicator that the next few years will not be the best in the stock market. But we will see things change, get the Nasdaq above 15,300 again, and things will start to look a little bit more better. Right now, everything is indicating that it should fall for the week ahead of us, and we will just see. And that brings me straight to the first technical analysis, which is Apple, and I can just tell you straight away that I was wrong on more or less all my price predictions last week. Apple are usually spot on, almost on the dollar and the cent. But last week I said I believed Apple would end at 143.50. It ended at 148.69, so I was a little bit off. And then Microsoft, as we'll get to shortly after this, I said that I expected to end around 298, ended at 309. So both of them did better than expected. Looking at Apple chart, I told you what I believe. I believed it could go as high as 150. That was what I said. Could go as high as 150, but should fall down by end of the week. My guess was it was turning around 147, 146 with the option of going to 150, as I said, but turning there, going down to 143. It went further up. It actually took up the potential at 150, is falling down. Finding support now at 146 is very good for Apple. But also here we see the same thing as in Nasdaq. They correlate, of course. Overbought on the relative strength index, it's 80 on the relative strength index, has not been that high for the last 3 months for sure. I can of course look into the longer period, but it's extremely high, and everything indicates that we should see a huge fall in Apple for the next few days. First, it will bounce around 146, good support at 146, and then later 144. I will keep my target of 143 as a buy signals on the short-term moving average, long-term moving average. Our system says hold. Totally agree, because as I also told you before, when things are overbought, they can just continue up. So there is also this chance that things can continue up. I would say it's a higher chance that it should fall, of course. Giving a neutral recommendation is just exactly what should be. But for Apple, we will keep the target of 143.50. So we remain negative, and since Apple were topping out at 158, I just been downgrading my targets for Apple. So we still keep that same view that most of the fun is over in Apple. We need to see some changes before we get too positive in the long term again. Bringing us straight back to Microsoft. As I said, I was off the target with Microsoft. Microsoft did much better than I thought. Buy signal, short-term moving average, long-term moving average, moving way better than Apple. Bring it above 300, gives lots of support from 300, has previous stops at 300. So now 305 is a very good support level, 300 is a very good support level, 295, 290, 285. As you can see, every $5 down, there is very good support levels. And you may question, why is the support at every $5? This comes to something called psychological level, but also over the last decade, we see more and more trading boots, and they will play between different levels. And typically they will play on these kind of levels. They will work the level between buying at 3, selling at 305, buying at 3, selling at 305. And when breaking 305, they will just move $5 up and start trading between these levels. You can look more into algo trading and trading boots if you like. Haven't seen relative strength index being this overbought for a very long time. The volume is following the stock somewhat, but not the best, I would say. And everything indicates that it should push downwards. But looking between Apple and Microsoft, again, Microsoft looks a little bit better than Apple, simply because more support down below and still remain within a slight rising trend. But everything indicates that Apple should go down. I will keep the target of $300 for Microsoft for this week. And that brings us to Tesla. And as I told you, I have Tesla myself. I bought Tesla 560. I start following. I told you it would go up to 800, 900, but somewhere there around it will turn. And when it passed 800, I told you that now I'm just running on pure trailing stop loss. So as soon as the stock falls, I will be out. Tesla is just pushing upwards. Had an amazing last week after good results. And that, of course, brought Tesla up. It's 909, almost 910. But also this one is heavily overbought on the relative strength index. Volume is going in different direction. The price is going up, the volume is going down. So here, just embrace for a fall. I'm very, very certain that my stop loss will be triggered today, and I will be out, and I will not be in Tesla for a long, long time. But let's forget me. Let's look at the chart, and everything in Tesla is somewhat okay. The trend is very good, but it is overbought, so we will have this short-term correction. So from a technical point of view, the stock is totally fine. It has very, very good support at 850, later 800. Of course, this is huge number of percentage if you're in the stock. Then 750, 700. So things in general is looking way better than when Tesla was 560. But I've seen this kind of formation before. And especially if we go to StockInvest.us, we type in the ticker TSLA or just write Tesla, we got the chart, and we can also click at the 12-month chart. And then it will make more sense why I say I'm out, because now we are at previous highs from January 6th. And I don't manage to see it. The volume is very little. I don't manage to see this being sustainable. I expect a fall minimum down to 700. Could be that it will pick up from 700 and just remain strong within the trend, but I don't manage to see Tesla right now being a good buying opportunity. If you're in Tesla and wonder what will I do, well, run trailing stop loss or put a stop loss, because things can just continue upwards. You don't have my guarantee that will go down. I'm just saying what I see technically. I've seen these things before. It went from 800 to 560 when everyone was saying, oh, this is heaven coming. It fall down just as I told you it would do. And maybe I will be right also this time when I say now it will fall. And I've said this for months already, since June, I guess it was, end of May, when it was 560, we'll get up to 900. Then it should be time to have a major correction, simply because it's hitting previous top. And this time it doesn't have the volume needed, in my opinion, to stay up there. So I think that we should see pressure, sell pressure in Tesla. Could be only back to 700 before bouncing up. I will evaluate if I will get in, but right now, when it will be triggered by my stop loss, I will be out, I will not be in. Our system ranks also Tesla as neutral, and I totally agree to that one, because it can just continue upwards, doesn't have to fall, but at the same time, there is a huge risk that it will fall. I will not dwell more with Tesla. We will just go to GameStop. And GameStop last week, I said I believe GameStop would end at 189. I told you I did the trading tips was GameStop. I got in at GameStop at 175. Say I was looking for it at $190, because that was very, very, in my opinion, possible trading level with the risk reward that you like to see. I consider the risk reward to be very good to reach 190. I can just reveal right now, GameStop passed 190, was up at 193, I think, 92, 93, and fell back. And I had a very, very tight stop loss, so GameStop was sold at 191.10 when I wanted to get that was the target that I wanted for GameStop. I expected some sort of reaction down afterwards. So GameStop, the trading tips for the week, gave us 8.89% profit. Happy about that one. But I had a vision that it would end the week closer to 190. That was the target last week, 189, that it would start slow, then end the week around 180.90. That didn't happen. It started the week too good, very good, and then fell the last part of the week. So targets and everything were correct. It was just the timing, which day of the week it would go up. So after it fell, ending the week at $169.8, I was almost $20 off the Friday target. So that was a huge, huge miss. Yes, we hit 190 as we said. But Friday target, which we measured to Friday, was very off. So my bad on this one. One of the biggest miss I think that I had so far. I forget to say the target of Tesla. So while remember it, I had $820 as target last week. I keep the target of 820. I think that we will see a major correction in Tesla. At the same time, let's go straight to 1,000. You never know. But I will remain a little bit negative, because I see a lot of these other charts indicating that the market should have a reaction down this week. And what about GameStop? Well, we will just have to do the same exercise. We go to GameStop chart, and we can see that our system has a negative score of minus 2.2%, saying that it's a sell. Totally agree to this evaluation. It's falling back from that level, which I spoke about, sell signals from short-term moving average, long-term moving average. Slight divergence in volume, but it's not enough to pick up. Relative strength index is moving downwards. Everything is indicating that the stock should fall a little bit more before picking up. If it falls down to 163, there might be a buying opportunity. If it falls down to 150, I would say it's even a more a possible buying opportunity for short-term swing trade. Could even be that we are close to something. But I don't manage to be too positive because on the upside there is a resistance at 180, 190, 200. So I don't manage to see unless there are some very good news. This to break up very fast. So for the week as such, I will actually lower the target. I think that it could fall all the way to possibly 155, bounce a little bit up. Should, in my opinion, end somewhere very close to where it is. It's 169.80. So let's say $168 target for GameStop for this week. And before heading to the crypto, to Bitcoin and DogeCoin, just let us summarize what we see in the chart is things is overbought, typical place for correction. Just keep in mind, I'll repeat this, repeating it very often, when things are overbought, they can just continue. It's that euphorism that can bring either the party to a higher level or just collapse totally. You really cannot tell for sure. It should not go flat. It should go either way. Either it just goes really good up or it should go down. So I don't manage to see that slow week. I'm betting for a red week. Again, hope I will be wrong. That will be a good green week. We will see. And that brings us to Bitcoin and DogeCoin. And I'm very happy to report that my DogeCoin investment is really starting to kick off as expected. And I told you in the last week's podcast that Bitcoin will head for 75,000. And if you look at the chart, yes, it came up to 66,000, bouncing down. That was more or less expected because you are in the upper part. Right now, the big problem is that there is not very much support between 60 and 55,000. So things can go very fast. It can fall very fast to 55,000. And that should not be in my opinion, big problem at all because it should just be natural. At the same time, it can just continue upwards because it's balancing on this level. Looking at different other indicators, we can say that the volume is following Bitcoin very well. I like what I see. The volume is very low as the crypto fell, giving me the idea that it can just continue upwards. And as I said last time, Bitcoin will go to 75,000. Will it be this week, next week? It's so hard to see. Will it be 3 weeks? But things are looking quite good. Should be aware of the risk. As I said, very little to no support before 55, later 50 and 45. Especially 45, 50 is extremely strong support. So any level down to 50 and you should just buy more because it will probably do very good. Given the volume, I guess Bitcoin will continue up. And it's so hard to put, but I will put a target for $65,000 this week. There are signs that things can go very, very fast, but I'm not sure if it will be simply because things are so uncertain. And curiosity, if you go and check the chart, you will see that also Bitcoin has a hold recommendation, neutral recommendation. So the systems are also unsure about Bitcoin. And it's very interesting that we see this across so many things. We see this same kind of signals. It just tells you something about, how uncertain everything is right now. Will it fall? Will it go up? Nobody really knows. Don't even the system know, so they say just hold accumulate, try to wait further direction because it can go both ways and we are just gambling that it will go up. But be aware, things can go very rapidly down to 55. I would not be very alarmed about that. And that brings us to the DogeCoin. And as I said, I believe DogeCoin will just continue upwards. Last week we had a target of, let's just double check, we had a target of 28 cents. It hit 25 right now. It's traded around 27 cents. So we are going towards that target. And DogeCoin look okay. I like what I see in the DogeCoin. It's far beyond the graph of Bitcoin. And that gives me the idea that all these cryptos which hasn't followed the path of Bitcoin might have a rebound. I think it was last week I told you that, okay, Bitcoin might fall while these other will go up. They will adjust to the same thing. Looking at DogeCoin, it's like a shitty coin, of course. Huge gaps between so it can have big leaps like down from 28 to 26, 24, 22, back up again. But I think that the support around 24, 25 will hold, and that it should just continue to push upwards. Hard to say if it will be 30 this week, but the target will be 30 cents for the week. Heading into overbought, but last time it was heading into overbought, it had a very nice rally from 20 to 34 cents. So I think the same thing can happen, that it just attracts some attention and keeps floating upwards to 30, 32. And I have to admit, I am on the trigger. I might sell when and if I see the situation is good, simply because 50% in my book is extreme profit, and getting to 30, I will have 50% profit on that I would call short-term investment. And that brings us to the very two last items in this podcast. We have trading tips and we have the portfolio. It will go very, very quickly because for next week I don't have any trading tips. I will not give any trading tips because I really don't know how market will go. I have this feeling it will be very bad. So I will not even put myself into trading tips. What I will do, and that will actually be the trading tip, if we have huge falls in the market, that we get into these 2-3% red days, that will give you a pickup opportunity, because then you should see some of these highly risk stocks fall very hard and you can get some good buying opportunities. So for the week ahead, I will rather chase that strategy, looking for red days. And if I miss out, the things go very green, well, let it be. You cannot have them all. So no new stocks being added this week. What about the stocks that we had? Excel Energy, Cardis, GameStop. Well, I told you last week Excel would be sold on the Monday no matter what, and it was sold at 65.22, leaving 4.45% profit on that trade. Then is Cardis, and Cardis started off very good. We bought Cardis at 7.20, everything so very good. Then it fell, and it fell again last week. I was totally wrong in my evaluation of Cardis. Was triggered by stop loss at 688, so I lost 4.4% on Cardis. But we had GameStop. GameStop bought at 175, sold at 191.10, 1.1, giving 8.89% profit. So the trading for these three stocks were in all positive. It was Cardis which went with a loss, and the other two with profit. So we are still on these trading tips having some super good gains so far. But for the week ahead of us, no trading tips given. The best trading tips I can give, I'll not give any pure stock tips, is look for opportunities if we have some huge falls, because if my idea is correct, if my interpretation of the market is correct, we will head into volatile markets. And in volatile markets, you can make very good trades if you are disciplined. What you will do, and I've given also this trading tips advice many, many times, you buy on red, you sell on green. So if you have a 3% red day, should be a good opportunity to get in, even if you get into 2 red days, the first or the second, especially the second, of course, will be a good day. Where you get in when you think that the stock are above support level, where it will find some support, and you think it's a fair chance it could bounce up, you go in. And when the green day is there, you take the profit, you sell it, and you wait for the next opportunity. If you can be that hard with yourself, that discipline, that, because the most people, they do like this, they see green numbers, they see stock going up, and they just want to get in. I want to get in before things go too fast. I want to get in a little late, buy, just to follow with a red day, and you are already minus or 2 red days, and you are very minus. And you fall back up, and when things start to go good, you start to get scared because you know from history, okay, last time you bought, it fell just after you bought. So when it's green again, you sell just to see it continue upwards. It's a very classical trading pattern. There are different strategies if markets are stable in one direction, if the trend is upwards, if the trend is downwards, but right now the market's moving sideways, and I see tendencies of increased volatility, so you have a little bit different trading strategy in these things. We can get back to that in later podcasts. But best trend tips, just to close also that part, is like I do, rather look for some good buying opportunities in some red days. And if the week turned out to be very green, well, so we lost this week. And that brings us to the very last part, and that's the portfolio. And the portfolio was very bad last week. We don't have many stocks left in this high-risk portfolio. The oil portfolio is, of course, doing very well. I don't have to repeat that all the time. I have different portfolios, different risk. In this podcast, I refer to my high-risk portfolio. And during these times, we had some amazing gains like Atos 92%, Ur Energy 95%, which we have cashed in on. But we are still sitting in some of them. We're sitting in the Fusion, which is turning out to be bad. Neo, I would say good, with good potential. As Tesla fall, you should see Neo might even go a little bit up. There are some reasons for that. Petrogeo Service, and the week at Norwegian 388 is falling back, but the high oil prices should keep it floating somewhat. But it might be that I have to reevaluate the strategy of PGS. I was very, very certain that it should just blush up. They are a little bit struggled by heavy debt, but that Petrogeo should be a very good buying opportunity. But as we're heading into these shaky markets, I don't want that high-risk portfolio to be too big. I want to reduce it simply because if I consider high-risk markets, well, I lower my risk. It's kind of good logic, isn't it? Again, minus 4%, ending the week at 832. So no good news from the portfolio either. It was in general a bad week. I was missing my targets on the major stocks, and my portfolio did not do very well either. So that was today's podcast. Tomorrow I will get back on the plane, head back to our office in Vilnius. I hope, as usual, that you will have a good week, that you will be able to put green in the bank, see some profit, and we will speak in just a week. Bye.